Why have crude prices jumped up sharply? Crude prices jumped up nearly 2% to $82 a barrel. Prices are up 13% from end February on increased uncertainty stemming from global concerns. The recent rise over the last few days have been on the back of comments from the US president and fear of supply disruptions. The US president was reported estimating the ongoing war to last 4 to 5 weeks or even longer. Adding to this, Iran has been seen responding to the attacks by striking energy infrastructure in Gulf countries. To cite some, Qatar's large LNG plant was impacted alongside one of Saudi Arabia's refineries. UAE's largest oil export port hub outside the Strait of Hormuz and some tankers in the Strait of Hormuz have been attacked. Remember here that the Strait of Hormuz accounts for 20% of global oil shipments and 20% of LNG. If Iran is able to block the strait for a longer period of time, analysts estimate crude prices to move higher. However, based on historical precedents from earlier wars, this is seen to be a low probability event for now. For India, estimates see that 40% of crude and 55% of LNG imports flow through this narrow strait. All of this places the market's focus closely on crude supply and related bottlenecks. Iraq suspended oil production at its largest facility, 1.3 to 1.5 million barrels per day, and shut down 460,000 barrels per day of capacity. Coming to Iran, of its crude output of 3.5 million barrels per day, it exports 1.5 to 2 million barrels per day. However, a positive here is that this production of Iran is largely absorbed by the excess capacity estimated at 3.7 million barrels per day for 2026. Saudi Arabia has 1 to 2 million barrels per day of spare capacity and has already raised exports along with UAE, easing some supply related fears.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.